I'm joined now by Antonio Garcia Pascual. He is economist for Southern Europe at Barclays Capital. Thank you very much for joining us today. Now, George Papandreou is signalling that he is prepared to do everything he can in order to get that sixth tranche of aid. But I suppose the question is Greece going to be able to meet the requirements?
Well, it is a little bit in the eye of the Troika, whether they meet it or not. I think they probably have done enough now with additional proposed measures for the Troika actually to pass this fifth review and then release the sixth tranche.
So what happens after that? Is that going to be enough to try and quell the markets? It doesn't look that way at the moment.
It's a little bit difficult because there are many hurdles, right? First of all, the overall target is a little bit ambitious. We think there's going to be a fiscal slippage despite of the additional fiscal measures. The second point is you need to also go through the EFSF approvals by the EU parliaments as a precondition for the private sector involvement to be launched officially, which hasn't happened yet.
Now, is this just another short-term sticking plaster at the end of the day? Is it not really more important what Germany thinks than what Greece thinks about what's happening there?
It is both. I mean, it is the part of whether Greece continues to make the effort, but as you point, very importantly, how EU policymakers think and what do they want out of Greece and whether they want to keep it inside. We think that they're willing to, they're making the effort for it, but also the EU has to put forward the policies also to resolve the key underlying issues.
Now, I'd like to also talk to you a little bit about Italy. Silvio Berlusconi has said that he's performed a miracle by presenting a new austerity package in just 4 days, but it's not quite as austere as it could be, is it?
It is not, but remember that the problem in Italy was not one of large deficits to begin with. So this package goes in the right direction, maybe a little bit watered down, to be fair, but it goes in the right direction. The problem of Italy, when you look at the underlying structural issues, is one of large debt to GDP and one of declining productivity. So Italy will really need to work on growth and growth-enhancing measures. That's the part that is really missing.
And indeed, it's been struggling with that for quite some time. What does Italy need to do to change things, to turn things around and to try to get some more growth?
There are several areas in the economy that probably require to be reopened, a full new agenda of structural reforms, but most importantly, I think, is labor markets. Issues related to collective bargaining, moving more the decision to the firm level, issues related to the segmented labor market that needs to be dealt with, and enhanced participation in the labor market. These three, I think, are key elements which obviously are not easy.
No, Italy is still very dependent on the ECB's bond buying programme, and that brings us back to Germany once again. Are you confident that that bond buying programme is going to remain in place?
So long as Italy and the government continues in applying the fiscal policies, I think the ECB will have to help. Otherwise, the alternative is too ugly.
And you suspect that is going to go on? You don't think that with the changes that we saw in place at the weekend that there is any real chance that Germany will put pressure for that to stop happening? Well,
eventually the EFSF should take over, right? But still we need first approval by the EFSF. So in the meanwhile, in the interim, it's all about the ECB.